Here we are on the euro dollar 15-minute time frame, and in front of you you're looking at a wedge pattern that's set up. It's a lovely one with nice harmonic fluid movement through the center of these structure lines, and currently risking here 20 pips for 30. What I'd like to do is talk you through the higher time frame analysis. I've got another chart open here. This is the euro dollar on the dailies, and if I put a structure level on at the closes of these candles just here, you can see that price has actually come into them and hit them. We've not really had a rejection, but we've hit them. What I'm looking at though is that I believe price can come a little lower, and the reason for that is if I extend this leg here, you can actually see just here the 127 comes in right here, and we've not yet tested it. And if we also invert this leg right here, we have a 1618 just below it. Now both of these fibs are actually very, very powerful Fibonacci ratios, particularly when they're coming into structure. And even though we've tested that area, I believe that price can come lower. If we look at the candlesticks formations in the past few days, we have not had a higher high, higher close. Let's drop down to the 240 and see if there's anything else here we can look at. Now again, we know that price isn't telling us that it can come lower because we've already tested it, but if we know anything about fibs and the golden means, the 1618 and that lovely 127 extension, it's a good indication that we can come lower. There is more confluence here as well. So what we did here was we came low, we saw a new structure low, an outside return, and then a new structure low. Now this technically here is an initial structure low because this is the one that violated the previous outside return. So we're not in trend yet, but you can see that we've had a 3-point move, we had an outside return, we saw a new structure low, and we're seeing an outside return again. So even though we've come down already to test the dailies down here, typically we do see price come down again for another test, even if it's just to test the closes of the candles. So right now we can look at price still coming lower. And let's drop to the 60. We have even more confluence on here. Okay, actually no, it wasn't on the 60 that we had the confluence, sorry, it was just the 15. So what I'm going to do here is let's go back and bring over our original account. Okay, so this is it here. So this is the 15-minute, and so you can see here now that we've had a nice rally down. We've got lovely harmonic movement inside this wedge, and we've had 2 touches either side. And so what that means is that on these pattern stops for me go above this swing high here, and it just so happens that we do have a psychological number, the 1400, so my stop is 5 pips above that. The only one problem with this trade is this right here, is that we have not made an initial structure low. However, because of the additional confluence we've got on the daily, so we've got two major fib levels there that haven't been tested. We don't have any real rejection on the dailies. We've got 240 confirmation that we're now in trend. We can see the market looks as though it wants to come lower based on the fact that we're in trend, and we can see the market is consolidating, and what happens during a period of consolidation, at some point we do break out, and this wedge pattern is a breakout pattern. So what that means then is that I've played for a 127 fib target minus 1 pip. So I'm just going to go ahead here, put an alert on there, so if we come down in the night, I can go ahead and move to break even just in case we don't get all the way down to target. So that is the trade. Probably have an update on this tomorrow now. We're back for an update on this trade, and as you can see now, we have had the breakout of the structure level here of the wedge pattern. We have also now closed below this level. So with this type of pattern, I've got no real way here of implementing any kind of risk management, because this It can still come up to here before coming lower, and so my stop is really just going to have to stay in this position now and just wait for this trade to rally on down and hit potential targets. And we're back for an update on this trade. It is 7:25 in the morning, and I've just been watching this for the past few minutes. I was looking to see if there's any way I can implement risk management, and just a few minutes ago there wasn't. But what had happened here, we were rallying right up into a raise, and then the last 10 minutes we sucked right back down, and now we're coming lower as well. So this now will provide me an opportunity to reduce some of the risk on the table. The reason for that is because we have got a structure shelf that has now come up and been tested. We have a nice big rejection candle at this level, and so when this candle closes in 4 minutes, if this closes below this structure level here and here, giving us a break below, close below, I'll be able to reduce the risk down to just a few pips above this swing high here. So I'll be able to implement risk management. And we're back here for an update on this trade, and as you can see, we are now pushing down. This is for the second time, and what had actually happened here, we'd pulled all the way down, we'd come 3 pips from targets, and we pushed all the way back up. Now I did move my stop, so I implemented risk management here, and I moved my stop to just above these highs and this big wick here, and as you can see, we are now working our way back down. I am expecting this time for us to push through, and throughout this video I've given multiple reasons why I think price could come lower. As you can see, these are still highlighted from when I spoke about these, and this was always going to be an area that we had to break through, and so I realized that this may be a battle that goes on, and it may not just be plain sailing. So from an emotional point of view, I was mentally prepared for that, so I knew where my stop was going to go. If we'd put in a new structure low, I could implement risk management. I knew that we could potentially retrace, and it looks as though now that we are actually heading down. So if this goes on to hit here, it'll be a lovely winner for 30 pips. Okay. And I've just resumed the video. We have now come 1 pip away from targets, currently on 29 pips, got 1 more pip to go. So I'm just going to go ahead here and roll a few pips past break even. Hopefully we can catch this thing hitting those targets, and this will be a painful trade, but nevertheless the higher time frame confirmation allowed us to get involved in this trade when we had not had an initial structure low or a new structure low, and it worked out quite well. It's not very often I take these types of trades, because usually I do need that extra confirmation, but you know, when you have additional confluence from elsewhere, then sometimes it's worth taking the trade, and that's exactly what has happened on this particular pattern. Okay, we're now at 30, just need to spike past it by half a pip here. Come on, it's teasing this buy limit order. Spike past, with it being the euro dollar, it has a very small spread, something like 0.1, 0.2. And there we go. What a beauty of a trade. 30 pips on the euro dollar. Lovely. Do me a favour, if you haven't subscribed, go ahead and subscribe. And of course, don't forget to give the video a like if you did like it.